Despite the rapid progress in leveraging digital technologies to enable inclusion, more than 1 billion people remain unbanked, with a large fraction of them being women. How can the Indian financial ecosystem leverage the full potential of its digital public infrastructure to serve its customers better? We discuss this issue on our next panel, Open Network Technologies, a driver of financial inclusion. Our speakers for today are Stephen Haley, Director, Market Development and Partnerships, Mojaloop Foundation. Kamya Chandra, Practitioner Economist, Digital Development, who will be joining us virtually. Nanjira Sambuli, Fellow, Technology and International Affairs Program, Carnegie Endowment for International Peace. Siddharth Tiwari, former Chief Representative for Asia and the Pacific, Bank for International Settlements. He will also be joining us virtually. M.G. Vaidyan, Senior Advisor, Financial Inclusion, Tata Trusts. The panel is moderated by Priyadarshini D., Associate Fellow, Technology and Society Program, Carnegie, India.
Thank you, Kanika, for that introduction. Hello, everyone. Thank you to the panelists for joining us today. I think let's just dive into it, shall we? I'd like to start with you, Stephen. Could you perhaps unpack for us what open network technologies are? And could you also comment on whether they are especially well-placed over proprietary technologies to address financial inclusion?
Okay. So yeah, first caveat, if there are any experts, I'm not an expert in open network technology, but open source technology a little bit more so, but open network technology going beyond just the code, but also the infrastructure and the networking that goes into connecting different pieces of code. But so I'd like to address that if I can I think the open network technology answer would just be a generalization of the open source technology answer. But from our experience, there's a few things, and I want to, leverage on what Rajesh was just talking about of putting the customer at the center. And the customer in India is going to be very different from the customer in a lot of other markets, whether in Asia or Africa, or especially US or Europe. And so some of the benefits of using open source and open network technology is the ability to allow a country to go on their own journey to serve the least included in their country. And I think that India is a great example of that, if we look at the instant payment journey of India starting with IMPS in 2011, the ability of India to go on a journey that included UPI and then included some of the improvements in UPI, that has allowed financial inclusion in the country. And so a country that is dependent on a particular vendor, particularly a foreign vendor, for any part of their financial infrastructure, is going to have a much harder time going on that journey that India has been able to go on, to go from instant payments with IMPS in 2011 to where we are now with UPI version whatever we're on. That journey is only possible if there's sovereignty over infrastructure, and open network and open source technologies offer that. So one is that ability to change. The other is the ability to bring costs down throughout that change. And that's cost for the participant financial institutions and cost for the hub operator, whether it's NPCI or whichever hub operator in a country. Those costs have to be brought down for the whole system. And so having a dependency on a particular vendor's business model within the business model of the entire financial system makes it difficult to adjust, not just the customer centricity of the product, but of the rules, of the price points. Those things can be dependent on a particular vendor if you don't rely on open source and open network technologies. And then the last thing I'll say for financial inclusion, why those costs are so important, is the ability to, again, customer centricity and tailored products that Rajesh talked about. All respect to our urban-focused, large Indian banks that serve me very well, that serve most of us very well. They don't serve a lot of people in rural areas very well, and this is the same in almost every country. And so we have to make sure that that small financial institutions, rural financial institutions, are given equal access to the national payments infrastructure. And again, there's very little business interest in a proprietary vendor to build to those small financial institutions. And so I think it's very important that we do rely on open technology that makes it cheaper and safer for small financial institutions that serve the last mile to participate in the payments network. So my three answers. Thanks.
Thank you, Stephen. I'd just like to ask the organizers to start the timer. Thank you very much. Although we'd be happy to sort of sit here and speak about this topic for, till the cows come home. I'd like to turn to Mr. Tiwari next. You've written extensively about the role of technology leapfrogging traditional evolutionary processes, right? Your conclusions were cited yesterday by the G20, India's G20 Sherpa, also in the opening keynote. What does this mean? And can you give us an example as it relates to India, particularly commenting on, how marginalized groups, sort of fared in this journey?
Thank you, and thank you for having me. I think the unique part of the Indian experience is that digital public infrastructure, seen as digital highways, and enable the country to leapfrog what is traditional economic evolutionary processes. Over the last decade, India's developed several of these DPIs, been, as just mentioned, enabled citizens to be part of the formal financial system through identity, part of the national marketplace through the payment system, and also making tangible gains in finance, health, commerce, as we heard on the last panel. Each one of them have a clear goal of whether it is payments or identity. They've been leveraged to scale in terms of 29 states, 22 languages, over 1 billion people. When verifiable identity was launched a while back, it was in a society where large swaths of people could not read or write, and it gave them access in the form of what happened in most advanced economies. Work that we had done earlier showed that India gained in 7 to 8 years what a traditional development process would have taken close to 46, 47 years. And so that's what's evidence of leapfrogging. And this wasn't only in terms of the aggregate where it happened, in terms of marginalized groups, whether it was the gender gap between men and women, whether it was between those in and out of the labor force, whether it was people with secondary education or without secondary education, whether it was rich or poor. In each one of these, India showed the largest gain that happened in terms of comparable countries. And so that's a narrative that is emerging in India, that digital public infrastructure defined as public-private partnerships can replace a traditional growth-oriented framework that we economists have talked about for a long time.
Right. Thank you for that. But I'm going to come to you next, Kamya, and I want to sort of pull back the conversation a little and ask you to start by defining what is how should we define financial inclusion? Is it enough to have a bank account but have no money in it, to transact with? Do you think there is excessive focus on technology to further or drive financial inclusion? Are there other factors that we need to take into account? To sort of put it another way, is technology both a necessary but also a sufficient factor?
Yeah, thanks, Priya. I think when we're asking how to define financial inclusion, I think financial inclusion cannot solve for, let's say, income, right? I think that's a separate question. The question of is an individual earning a subsistence wage, or are they, earning and performing well? I think financial inclusion should be thought of in phases, right? The first phase is access to the formal financial system. The second phase is sort of daily engagement or interaction with the formal financial system. And the final phase is for the demand for whatever financial services you really require to be met. And so I think in that phase, India has sort of done very well on the access to formal financial services, because that's, that was the journey that Mr. Tiwari touched on based on Aadhar eKYC that allowed for sort of near universal access to a formal bank account, right, for all, which happened based on eKYC. But then the second phase was sort of daily active engagement with the formal financial system, which is to say, for the money that you are engaging with in your day-to-day life, are you using the formal financial system to, let's say, save, or are you using it for payments, right? These are daily active sort of use cases. And then the final layer, which I think is where, we are working on now, which I think will take another 5 years or so to reach sort of final fruition, is to say, for your demand for, let's say, credit, or for your demand for insurance, are you able to leverage the formal financial system equitably and sort of universally? And I think we should think about inclusion in those phases. I don't think you can get to access to services without access to accounts. And I think we've sort of traversed the first two journeys, and now we're working on the third, which is where you'll also see the layers of the digital infrastructure address those phases over time. So the first layers worked on identity, eKYC, authentication. The second layers were focused on payments, as Stephen touched on, IMPS, UPI, but also the more inclusive forms of payments, such as the biometric-based Aadhar payment bridge, Aadhar-enabled payments systems, which is based on a thumbprint to deposit money, the Bharat bill payment system for unified bill payments, and then now on the third layer, is where we're thinking about what are the open networks that are required for this phase, and for this phase, the kind of open networks are around data sharing. Are around the ability of an individual to apply for, a loan product from multiple entities at once, which is where you see the account aggregator and the sort of OCEN piece. I think to get to your question on technology necessary, sufficient, look, I think at the scale of India's population and demand, which is 1.4 billion, let's put it this way, I find it very hard to think about solving this problem without technology, right? I couldn't sort of imagine a way to reach or scale up physical infrastructure at the cost that physical infrastructure typically requires, which was the approach of the 50s and 60s when the regional rural development banks were set up, right? I think today it's impossible to solve it without digital, and digital reduces transaction costs and creates accessibility. I don't think digital is a panacea, right? Let's put it that way. I think the power of digital is to create ecosystems of people, essentially, that are solving at the last mile more effectively and are solving as part of an open network rather than, competing walled gardens or competing silos. So I think that's where I sort of stand. I think technology is definitely sort of necessary if you have to get that leapfrog of scale. Happy to hear others' thoughts on this as well, of course.
Thank you, Kamya. Would you like to come in at this point, Nanjira?
No, I think Kamya has given us a really interesting, probably pragmatic definition, right, of what financial inclusion should be. But I couldn't help but think about how the interpretation of that entails and then how it plays out in different markets. So I was thinking, for example, if we define financial inclusion as access to the formal banking system or formal financial systems, the politics of what is formal and informal make that very interesting. And I think of Kenya in comparison, where M-Pesa's success as a technology, before we talk about whether it was open or not, was the fact that it actually helped to start digitize a process of moving of money or transactions that the banking system that existed, the formal financial system, was just not catering to. And now we can ask the questions about whether it's the openness of the networks that they use that made it possible, or just a social understanding of a need that then the technology was deployed into. And then that opens us up to a lot more other questions like, okay, Now, when we say we're including people, is it including people so we count that they've gone through the system? Is it that we should bring in the questions of whether they're financially healthy? I think we can't divorce them from whether we talk about these technologies, and balancing those two brings a very interesting dimension to how we also define the kinds of networks, open networks or openness that we're looking for. And I'll just conclude that by saying, for all the fuss that has been around financial inclusion, that has generated fintech and so on and so forth, the number of people who are still excluded is massive. I mean, in Africa alone, there's still 400 million people, despite all these investments, despite all the fintech hype, that are yet to be accessing any formal banking system or whatever else we're describing as financial inclusion. So then that makes us ask, is it a technology question? Is it that these ideas of what open networks will be what gets it done? Or is there something else we're missing in that conversation that should design the interventions all around as we go forward?
I'd like to come back to that question and pose it to all of you. And I think it's a very valid question. You know, with all the advancements we've made, all the stories and the narratives, yet there are many, and I think Rajesh referred to 1 billion remaining unbanked, right? So what is the missing piece? But before I do that, Dr. Vaidyan, if I can come to you, could you share with us, from your experience, 1 or 2 practical examples in India on the deployment of some of these technologies that we're talking about, whether it's the Jan Dhan accounts, Aadhar Mobile Trinity, or UPI, and how you have sort of attempted to reach the last mile, which I'm told now the right term to use is the first mile. If you could share with us your experience, and while doing so, could you also touch upon what the role of a non-governmental or a non-profit or a philanthropic organization is?
Thank you very much, Priya, and thank you, Carnegie, for this opportunity. It's extremely happy to listen to these discussions. My thoughts go back to of course, I was with State Bank of India for some, close to 4 decades, working with financial inclusion as a part of my assignment, various assignments. And my thoughts go back to 2005-06, when I was heading the rural department of State Bank of India. State Bank of India is the largest banking conglomerate in India, working all across the globe. Here, the State Bank of India was actually having 66% of its branches in the rural and semi-urban areas. We had a problem at that particular time that was a problem for any bank at that time. Like, customers come to the bank, most of them are illiterates. How do they do a transaction? So you take fingerprint identification, and then that has to be witnessed, and then some third party will come and money will be given. And so that was one killer use case for financial inclusion. Simultaneously, we had something called Manrega. Thousands of people were employed in rural India for various types of work. They were to be paid. Most of them had no bank account. The third killer app was killer use case was the migrant labor which were there in Ahmedabad, Bombay, Surat, any part of the country you go, you have migrant laborers. That was a time, 2005-06 and all, there was no Aadhar, there was no Jan Dhan, there was no mobile phone. And banking outlets like even ATMs were there far and few. So you had a killer use case, a killer app had to come. So the idea of this biometric identification came in SBI first, so we sat together and thought how it can be, brought into practice. Our global IT center was still into the core banking of the bank as a whole. There was nothing special for the financial inclusion accounts. So we got a technology, something like a Jugaad technology, and created a small card, biometric card, like SBI Tiny Cards. SBI Tiny Card was called SBI Tiny Card because the normal savings bank account is the normal account. This SBI Tiny Card account is a tiny card which is not actually working in the branch. It can work outside the branch. Because if you go and do it in the branch, then again you have to deploy so many number of people and premises and all those things where the cost of operations will be very, very high. It will become very uneconomical for you to do. So you have to necessarily have this transaction out of the branch. So the business correspondent system came to being at that time. Because most of these people, laborers and all, they go in the morning to work by 8 o'clock or something, and by the time they come back, the bank is already closed. You cannot go to the bank. So where do you go and keep the money, deposit the money or withdraw the money? So this need was tremendous. So if there is a need, there is a way. So this started, and then we thought we were in Bombay and we have to go to the farthest place to see whether it will work there or not. So we went to Aizawl in Northeast and tested that. Then we went to Pithoragarh, then Himalayas. It worked there also. And then various parts of the states, remotest places, we went and we found that it was working. Then the realization came. Like, we go and ask for people and money for this, because it's all expenditure. No? State Bank of India was a publicly traded business after all, even though it was a public sector bank. So where is the benefit, where is the business case? There was no business case. All the balances put together was nothing. And we were employing people from all our branches for creating business correspondents in each branch and all those things. So we really felt that somebody should give us some commission or something. Nobody was willing to give. So finally, Government of India said that they will give a provision for technology fund. So some technology fund of 500 crore was allocated and announced in the budget, but by the time it came, it takes a long time to come down to the beneficiary, and then by that time many banks had introduced small, tiny accounts of their own. So who will get the money and how much money will be given and all. Then the Eureka moment happened. Then yesterday when Madam Lekhi was talking, I was sitting and I was actually celebrating. The Eureka moment was that government of Andhra Pradesh saved 8% of their funds deployment for their social benefits and Manrega and all those things, because they deployed the payment through SBI Tiny Cards. 8% saving. State government agreed for payment of 2%. So that changed the situation. So when there was money here, all the business correspondents, there was no business correspondent. SBI thought of putting up a Section 25 company of its own to be a business correspondent, because you had to comply with the requirement. Nobody was, because there was no money there. But then we found that when this 8%, 2% came, everybody started coming to become business correspondent. And then all the state governments wanted to have a tie-up for making all their payments through SBI Tiny Cards account. So that is how then 6 years after that, we found that it was not open technology. It was SBI's technology was SBI's technology, Bank of Baroda's technology was Bank of Baroda's technology. So we have to have a larger use of this technology. So SBI took the leadership in setting up, along with Government of India, DFS, RBI and all the NPCI. We deputed our people also for initial things, and NPCI came. Then Aadhar was introduced afterwards with far more characteristics and options. That is what is turning the whole thing around now, UPI and all those things. It's going to stay here, for sure. I think I have taken enough time.
No, sir. No. So essentially, SBI Tiny Cards are the precursor to Aadhar, I think, is what you say. Yes. Thank you for sharing that. I know you come with tremendous amount of experience in this space. So I think I'd like to turn to you, Nanjira, next, because I think let's open up the discussion a little bit more. In the context of the CyberFi project at Carnegie Endowment, I know one of the premises that is put forward is that digital financial inclusion needs contextualization. And I was wondering if you could unpack that for us. I know we touched upon it a little bit, but if you could elaborate, I think that will be great.
Yeah, I mean, and just to say, CyberFi is really just looking at how do you ensure
financial inclusion done through digital technologies is secure. And to contextualize that is to say, for example, with Africa, which we've taken as a starting focus, is that financial inclusion has at once been about banks realizing they had to step up their game, but because the disruption really through digital was through the mobile network organizations, operations really. So if you're looking at where the risks or where the vulnerabilities especially lie, and if you center the user, to Rajesh's excellent point, where the vulnerabilities to cyber attacks or to any sort of divorce from their finances could occur, you're looking at a vastly different landscape. So we've created all these systems to try and include people and to serve them, but now to bring it all together, how is that sustainable? How is that, where does trust lie to use the systems first and foremost? The developmental agenda may be that, that was the only tool that went to a certain community, right? And they're sort of beholden to it. But when you start looking at whether that necessarily means people are in a financially healthy situation, what actually got them onboarded versus what retains them, you start to realize it's a mix of both the technologies in use, but the people factor. The biggest driver of mobile money adoption in Kenya, surprisingly, was not technology, the mobile phone. The biggest driver to date of new accounts being opened, whether it's for banks, even banks are using this model now, is offline agents, where there are kiosks or people really is at the core of it, who people in communities will go to and trust and say, okay, I understand that I can get this benefit from this service, help me set myself up. And as more tools go from basic USSD kind of devices to super apps and everything, those are the same people communities will go to and then give trust. Should I continue using? They'll ask basic questions like, should I use this application since it's been advertised everywhere? How do I set it up? Where language is an issue. And so when we talk about digitizing all the systems more, the question is, are we trying to get rid of those people, or are we trying to use them as the critical node of trust? All these questions are coming up quite interestingly for us as we say, where are we headed, right? And then, it's probably out of scope, but then the question is, after all of that, what are we including people into? One big challenge in a market like Kenya is, in as much as about 90% of the adult population is financially included, primarily again through the M-Pesa system, are they financially healthy? Are they caught up in a situation that actually sets them up for these so-called lofty goals of development, prosperity, and so on and so forth? Sometimes the answer is not, because what we're using the technology for there is not to propel them better, but to make them data points for extraction through credits, lending, gambling, and all of that. And so I think the question I would throw out as a hand back is, would open network technologies, whatever they're defined, do it any differently?
Thanks for that, Ranjana.
Can I respond?
Yeah, I was just coming to you, Kamya, but go ahead.
Yeah. No, I think Nanjira makes a good point that at the end of the service delivery, there often is a person, right? And that person is crucial for building trust and for advisory. I think some of the challenges we've seen in India, at least, is that when there are people, unfortunately, there are people in the chain as well who don't have good intentions, right? And who end up blocking people's access to services. So, for example, you'll have your local, let's say, a corrupt officer that you'd have to deal with, right? And various middlemen that, let's say, take charge a surcharge on top of the cost of the loan. I mean, you heard Rajesh as well talk about the 2-week process. That 2-week process isn't navigating the bank system, it's navigating the people who are blocking access to the system at various points. So I think the idea of open network technologies is not to actually replace advisory or trust capital people. It is to remove the potential of people that are actually blocking access to a service, so that you choose to go to a person that is in the formal financial system or a banking correspondent for advisory, but that you're not blocked by people, so in that you can actually access a system on your mobile with convenience, without having to go to, let's say, any sort of institution where the people are actually preventing your access at a local level. So I think the idea of, again, open network technology, if you think about, let's say, UPI as an example, right? It's a mistake to say UPI scaled only because of technology. While it underpinned, the protocol underpinned interoperability, the reason UPI scaled was because PhonePe, Google Pay, Bharat Pay, Paytm, these guys sent out people to go shop after shop after shop, and the ecosystem of the market dynamics was designed in such a way that they were interoperable but competing. And so every additional individual personal interaction added to the collective network in that inclusion process, right? So I think I think let's not create dichotomies that you can either work on a technology driven approach, or you can have a people driven approach. I think the right answer is to say, where does technology remove the hurdles people face due to people with misaligned intentions, and how can we enable how can we enable the right people to operate to continue to serve that layer of trust and advisory? I think even in UPI, you saw, your Kirana shop before adoption, talk to 5 other Kiranas, talk to the business correspondent, say, is this safe, right? Before that adoption actually happened. So I think we have to think about both of these as solving both forces of human nature and finding systems that work using both technology and sort of the power of people-driven trust and people-driven sort of local communities. I hope that answers some of it.
Right. Thanks,
Yeah.
Kamya. If I can stay with you for just maybe one more question, since Nanjira brought up the point about data points, people being about data points, the motivations for the technologies being deployed for financial inclusion. I was wondering, the RBI has introduced the Financial Inclusion Index. It's built around 3 pillars, right? We're doing fairly well on access, but I think when it comes to quality and usage, we still have some way to go. And I was wondering if you'd like to touch upon maybe what have been some of the developments in the recent years that could, perhaps be deployed to address these 2 particular factors.
Yeah, I think, as I said, as Mr. Tiwari also touched on at the beginning, financial inclusion typically ends up being a 25 or 40-year journey, right? So to look back on the last 5 years and say, well, we haven't solved full access to services, I think it's a bit premature. I think we have to give it some time to be able to see the full effects of the digital infrastructure that we're creating. So for example, the infrastructure around payments and identity, what infrastructure around payments actually does is create a digital trail or a digital history, which has to accumulate sort of over time in order for that history to be reviewable and therefore usable for access to financial services, right? So you won't get approved, let's say, for a loan, or for maybe insurance without an institution being able to see what your trail has been over the last, let's say, X period of time. So I think the infrastructure that we're most excited about building for the last 2 years, actually it's been 4 or 5 years now, we forget time flies, has been two sort of very powerful open networks. One is Account Aggregator, which is sort of India's infrastructure for financial data sharing. It's sort of I don't say it's India's implementation of open banking, it's sort of India's answer to open banking in some way, because it's a consented sort of data sharing network that's truly quite decentralized, right, and fully federated, and has competing consent managers in the same way that you have competing payment service providers in the UPI ecosystem that work well for us. And what this can do actually is for an individual who, let's say, doesn't have collateral, to actually show on their bank account, look, I've been transacting, let's say, on UPI, on BBPS in my bank statement. So my bank statement for the first time, has a history of my minute sort of granular transactions that I've been doing. And you can actually authorize me for a small ticket loan as per my transactions, even though I don't have the collateral for a large ticket loan, right? And I think basically what that does is it lowers the bar for sort of being approved for a loan, especially when it's small, and it lowers the transaction cost for a financial institution of servicing that loan if they're able to get that data with trust. So Account Aggregator, in the last 2 years or so has scaled up to 1 billion plus accounts live, as well as 2.6 million transactions. And that, number has been growing at about 65-70% month on month, similar to sort of the early days of UPI. So I think right now people are quiet on Account Aggregator because the hockey stick is still in its early phase. But once you see it scale up, what I think you'll start to see is people taking ownership, people showing control over their financial data and saying, look, I want my data to go here. Because this provider is now giving me sort of access to services. And the powerful thing about account aggregator is that no player, so Mr. Vaidyan, is former SBI, you would ask, like, why would such a large bank join the account aggregator ecosystem? Won't they be a giver, not a provider? But the power of open network sort of systems in a country as big as India is that even SBI with 500 million accounts has so much to gain from joining an ecosystem of 2+ billion accounts that cut across, let's say, banking, insurance, as well as securities, as well as the tax system. GSTN just announced they went live. RBI just announced that GSTN, would be joining the network. And so I think it's very powerful to see, again, the power of the collective network and that everyone sort of wins when they join this shared network. I think account aggregator is one sort of critical piece that when we look back on 4 or 5 years from now, we'll see it as a key building block because it solves that intermediate need of being able to underwrite somebody for any sort of financial service. The second sort of open network technology, which I'm optimistic about, but which I think will take slightly longer than account aggregator, is actually the open credit enablement network. And what that does is rather than me, going to any one bank and going through their full process only to be rejected and then have to go to the next bank, the open credit enablement network allows me to apply to multiple banks sort of in real time and have that be an open interoperable sort of set of APIs and a network, right? That allows me to think of it as a common application for many banks in one go. And I think we've got 7 sort of large lenders that are live on it already. And it's one of those things where it's going to be combinatorial. Like I think Open won't succeed without the data sharing infrastructure. The data sharing infrastructure might not sort of scale to the last mile of actually providing the loan competitively at competitive interest rates without Open. So I think it's a very interesting time where, typically the infrastructure that we've built, Aadhar, for example, was like one large block provided by one entity, which was UIDI, right? Similarly, in payments, you had NPCI as the core institutional organization that drove many different payments platforms. I think with account aggregator and Oken, you're seeing quite distributed ownership of the adoption. And for example, account aggregator doesn't have a central switch for financial data sharing, right? Because that would be sort of counter any privacy sort of objectives. And so it's becoming more and more sort of complex over time. And I think it's quite an interesting journey to sort of be part of and to watch.
Thanks, Kamya. You talked about distributed access. I think I want to come back to you, Stephen. So when you talk about open network technologies, what is the kind of distribution that we're looking at? I mean, I could be wrong, but are we talking about multiple vendors? Are we talking about multiple stakeholders involved in the entire chain of piece of technology or the technological solution? The reason I ask this is that if you're talking about proprietary technology, right, there is one entity that you can reach out to, and they have the accountability, right? How does that work when you're talking about open network technologies?
I mean, again, I can speak to it from the open source perspective. I think specifically, there is still an entity there. If you're talking about a hub and spoke kind of network of how you're setting it up, the hub operator is still the accountable and liable party. So like NPCI, if you have a problem, that's where you go. Now, if NPCI wants to turn around and say it's not our fault, it's this American company that built this piece of tech that screwed up and charged them for this error, then that's up to NPCI if they want to have that type of relationship. But in the end, from our belief, it's the hub operator that is operating that piece of technology where liability should fall if it's going to be owned by them and operated by them. And again, how they share liability with their software providers is up to them and is up to their software providers. What open source would provide them is a choice of who their vendor is and how they share that liability with that vendor. So you're still going to have, I mean, again, NPCI is thousands of people, an incredible amount of technology and capacity. Most national switch operators are not NPCI. Most of them will rely on software companies. And So you're still going to probably share liability with a software provider. It's just you can choose, I don't like this agreement that I have with this software provider this year. I'm going to change it next year. And the change doesn't impact all of the financial institutions, all of the, to the whole stack that Kamya just laid out for us, which is absolutely amazing. And yeah, on that journey, what happens if at a certain point on that journey, somebody says, oh, wait, stop, we have to replace this one huge piece of software, and it messes everything up. Then that doesn't just mess up the 300 banks that are connected into UPI right now, it messes up everything that she just described. And so that's, from us, the benefit of having that is that, yeah, your ability to change who you hold accountable for problems can change without having to disrupt all of the other systems that you're connected to. So I hope that is.
It does, definitely in theory, but how does it work practically? I mean, how do you build trust between all these components? Right?
I only luckily focus on one piece of it. I think Kamya would be an amazing person to talk about how to build trust among all those different components of it. But from our particular piece, it is, in our opinion, the...
Is it done through agreements, for instance? Practically, what are the nuts and bolts of putting these various components? I understand what the advantage is, right? It's not a single point of failure, to put it another way. But how do you get all these components to have the trust and that, to be able to work in a coordinated fashion so that what you're alluding to as the benefit actually comes through? Is it done practically in terms of bringing them all in the same room and, hammering out an agreement? How is it done?
Yeah,
is it done technologically, through interoperability? I'm just trying to visualize how that might be achieved. And of course, Kamya, if you want to come in, or Mr. Tiwari, you've worked on some of these technologies, so if you'd like to sort of bring in your perspective, please feel free to do so.
From my perspective, I would just say I don't think for everything you just described, it's necessarily different than if you have a proprietary vendor of a component of your software. You're still going to have everyone come together and have an agreement and structure those agreements in terms of who is liable for what problems. Again, it's just a matter of the choice of, oh, we've now built it and I don't like that liability, or what we've discovered about our system, that relationship now needs to change. The value added by that vendor has changed, then you have the ability to change that agreement later on. But I don't think there's a significant difference between the actual agreements that you would want to put in place between a proprietary and a provider of an open source software.
Right. Thanks for that.
But I would just say it has nothing to do with those of us who are the nonprofits who are governing these open source software.
Right.
The one thing I do want to make clear to everyone is that is not our job, unfortunately. We don't want to say pass the buck, but it is, you hire a for-profit software provider who provides open source to you, and the liability is with that as a software provider, in case it's not clear how open source works.
Interesting. Thank you so much.
Priya, can I step in
Yes, please.
here?
Yes, sure.
So, look, I think you put your finger on the issue. Through decades, we went from end-to-end delivery, and that failed. And the new model of managing these things is what people call a platform approach, where there's a public-private partnership. The public sector sets out the regulatory framework, the guardrails, and the private sector has the consumer interface, whether it's for M-Pesa in Kenya, account aggregator in India, or Ripple in the United States. That consumer interface that the private sector has allows them to innovate and satisfy consumer needs. And that is not something the public sector will ever control. It's a human nature to truck and barter, and there is no agreement there. Agreement is whether the market will bear it or not. The second point is, in India, this was never, planned, but what did end up was that these layers of digital public infrastructures that emerged over time when you stack them one on top of the other, they begin to give you network effects that Kamya talked about. And these network effects are exactly like what a big tech does, but without the monopolistic tendencies. Third, all of these have to be borne by the market. There is no subsidy in this. So the transactions have to be in single digit rupees to be able to be borne by the market. I think in the account aggregator framework right now, a completed transaction is about 7 cents and it can be borne by the market. Last, it has to be scaled up and down. And that's where it comes back to your original question, is it technology or not? And the answer is absolutely, it is technology. You cannot do these 4 things outside a digital framework. Analog framework will not work. So I think another way to look at this is that if you have the architecture right, you need to let the private sector to innovate, to deliver, whether you call it the last mile or the first mile. It is their job, and if the market sustains it, you will succeed.
Thank you for that. If I could pivot to you quickly, Dr. Vaidyan, I was wondering, again, given your experience of actually having, worked this out in the field, if you will, could you tell us or share with us 1 or 2 challenges that you've faced?
See, I'll tell the challenges, okay?
Sure.
But I have a difficult situation here.
Okay.
My feeling and what I have been working with is with the belief that financial inclusion is basically for the purpose of weaning away the poor from usurious moneylenders which are very usurious of interest. Number 1. Number 2 is taking them away from perennially depending on philanthropic capital.
Okay.
That is what is happening now, if you see. So financial inclusion actually is aimed at eliminating poverty. Poverty is number 1 enemy of financial inclusion. If you see between 2005 and 2021, that time we started, the Aadhar and UPI and all these things.
Right.
Poverty has gone down by 515 million people. No, India is no more. No, we reduced it so much. When we started, it was 80% in the beginning, and it has come down to now 23 or 24% or something. So if you have to bring people out of poverty, then you have to, you are not talking about a situation where a tribal farmer who has got no land or any means can choose between lender, which lender I have to go and take and all. No, we are not in that type of a situation. I am working in Tata Trust, we are working in villages which are far, far away from any sort of even organized lending. If you ask the people to come to the bank for talking to them, they will not come. So you actually have to go to them, train them with the latest methodology for farming, fishing, creating better varieties of dairy and all those things. And then create confidence in them and bring private sector to support that. Then philanthropic capital will come in the form of either from the philanthropic organizations or the CSR. So we have actually in Tata Trust, we have created 9 specific use cases,
Okay.
which can be replicated for the purpose of bringing such people out from their utter poverty with the help of. Now the question here is, if I and all the people who are sitting here can raise loans at 9% or 10% or 11%, why the poor should pay 100% from a money lender or 27, 28, 30% from an MFI?
Right.
When State Bank of India is giving loans at 4% and 7%.
Right.
And if the benefit of technology of UPI and Aadhar, JAM Trinity, can actually reduce the cost Why can't we do that? That should be our aim. Because it is too, I'm not talking of a situation when my poor fellow in Jharkhand will go to different lenders and find out who is better. No. So these use cases are there, by which, like we have already put this into practice. Say, for example, we have created five dairy units in the remotest part of Rajasthan, UP, Punjab, and Maharashtra, and all 100% shareholders, rural women, who have nothing other than maybe that cow. Okay, the loan will be given by bank. I have seen that both public sector bank and private sector banks are willing to give. Why? Because they have been formed into a group. The technically qualified people are there to give advices. So the bank is happy in giving. It is not a scattered lending. It is not a loan mela. What is the biggest problem, challenge that we are talking about? The challenge is the loan mela and the loan waiver. Loan mela and loan waiver killed the culture. Now, I know my borrower, two brothers are there. One brother has got money in the account. The other brother repaid the loan. The brother who has got money in the account said, "Sir, I am not repaying it because the Chief Minister has already announced a credit waiver at the part of the election speech."
You're talking about credit culture.
I am talking about credit culture. So, if that is a culture, now today when I go, I find that some 80% of my borrowers in these tribal areas, they are not eligible for a loan because of their credit history. Some small amount somewhere they did not pay. So now I am sitting with the banks to find out a solution for that, one-time settlement or some other way by which this credit record. So I am thinking of that. We have to, otherwise we will, now let me tell you, this thing which we have created has actually solved the problem of the rich. UPI, if UPI is not there, I will not get vegetable in my house. Because from morning onwards, my wife is sitting with mobile phone, ordering all whatever she wants to order from. Half an hour, vegetables will come into the house. Whose problems have been solved? So something which we have created for the poor has actually solved the problem of the rich. Let's think about the person in some previous Mr. Benson said, no, who is the person? The person is like this. He has nothing. If somebody falls sick, there is no insurance. If there is an accident, so when we go to State Bank of India or to any bank, we say that we are coming as an integrated unit. We are going for integrated development. We are there to do all these things, in terms of organizing and training, capacity building and all those things. Now, you give the loan part of it, which is risk capital. We go to the CSR people and tell them that, this is our plan. You give whatever percentage is there, you give so that it will support our argument. We went to all the insurance companies and told them that you come along with us. No, they said that, it is rural area and all. I said under the micro insurance agency thing, you can create an FPO as a micro insurance agent. So some FPOs, use case has been created for that also. Model program has been created for making an FPO a micro insurance agent. So you understand what I am saying?
Absolutely.
So we have to eliminate poverty.
I think
poverty is not choosing which lender will give me money. No.
No, that's a great point. Before I come to the audience for questions, a quick one for you, Nanjira. A significant part of the unbanked and underserved are women, right? And I know that this is something that has occupied your mind. You've written about it. And I was wondering, is there something we can do through these open network technological solutions that we're talking about, something specific to address that particular segment? Do we institutionally, in case we don't already, get more women to work when these solutions are being built, designed, or is there some other way?
It's the whole gamut, essentially, because the challenge of saying, specific things, people take binaries. They imagine if you have 5 more women in corporate banking, then, women's financial inclusion or issues will be solved. It's the whole gamut, everything from the consideration, including this very conversation that we're having now. What are we situating all this excitement about what technologies can do? Is it to address the very real situation on the ground as is being painted, or is it because a bunch of us can create this stuff because we see it from a technical lens? And that's where even the question of women in tech narratives has been a challenge. For one, even if it's getting more women coding or building these systems, that in itself has its own set of challenges where it's not necessarily a pipeline issue. It is everything from the patriarchy, from adverse norms. That in itself is a big enough problem. Typically, when you paint the picture, then people say it's too big a headache. Let's just go home and think about it again. But I will say this. Even from the communities that we say we are trying to serve through all this, they are experts of their lived experience. So in that regard, they are there. Our problem is we are not humble enough to be reflecting that. So this fundamentally ceases to be a technological problem. It becomes a societal problem that is not going to, we can blockchain it, we can open source it, but it still remains that pervasive understanding. Those are the interpersonal issues that still pervade society today and that we need to keep in mind when we think about how to include the excluded, or heck, figure out what we're saying is a new way to build a commons where everybody's actually being served, if including people in the existing system is not going to work.
Right. Thank you.
I just want to add one thing to Nanjira. Sure. I fully agree with her on this. I think, for example, for people that are designing these systems, it's very easy to declare victory early. So for UPI, for example, we're declaring victory. We've said, look, we have this many transactions. This growth rate is crazy. So we've done it, sit back, now it's maintenance. But to date, UPI isn't available for joint bank accounts. And most women are holding joint bank accounts with their husbands or with their brothers or with their fathers, right? Because that's the fabric of society. And so you've created, in some ways, a system that has systematically left out women from the most accessible sort of payment method, because most of our, family members who are women would have these kinds of accounts. And it takes a little more work. It doesn't take that much more to think through what are the specific needs, let's say, that women have in this kind of financial system, and make sure you just go to the end. I think the problem is that even getting to where, let's say, UPI has gotten to now is a lot of hard work. And this is definitely not to put down anyone at NPCI. I mean, it's taken a long haul. But it is a tough job, but you have to wait to declare victory, I think, until the system has actually solved inclusively for all participants. I fully agree on this point.
Right. Stephen, you have something to say?
A very quick anecdote that I love to tell is when we first moved to India 3 years ago, my wife, who has a PAN card, has an Aadhar card, but has never actually been banked in India before, in order for her to open up a bank account, for us to open up a bank account, she needed a written physical check from her mother, her father, or any male relative on her father's side in order to open up a bank account. 3 years ago, we went to 5 different banks. They all told us exactly the same thing. So yes, there's still, to Kamia's point, there's still work to be done. And there's all kinds of little things in there like that are still hiding.
Right. I just want to turn to the audience to check if there are any questions. Yes, please go ahead.
Yeah, hi. My name is Vijay. I work with a consulting firm called Hacklet. Fascinating discussion. I'd like to address primarily to Dr. Vaidyan, but others are welcome to chip in. I'm just wondering, to your point about credit and how, credit is still sort of largely informal with all its attendant consequences. Some measures by the RBI, like a small finance bank or a payments bank, etc., those initiatives have sort of come up, some of them relatively more successful than others. What would your advice be to both the central bank and some of these institutions to embrace more technology in order to sort of get to greater impact? Or are they doing all that they could within what is possible? Is there anything we could do with those institutions and the technology that all of us have been talking about to better the impact here?
Thank you for the question. My understanding is that whatever technology is required is already here. the Jam Trinity, the UPI, and what more do you want? Interoperability. It's already here. It's a question of who will, that is where the philanthropic institutions and NGOs and all will come. See, the problem is not lack of any technology. You have to take them. Now, in Northeast, there are still bankers who ask for guarantee from a government employee for giving a KCC. Why is he asking that? When I go to a bank and ask for loan for the poor, they say that, sir, you know that no, when you were in the bank also, all the rural accounts and all are NPA. Why do you want us to go and give more NPS? Then I make my full presentation, who all are the partners in this. In Tata Trust, we call this Development Impact Investment Program, which is a collaborative effort of, as I said, bank, then insurance company, and all the people put together, capital coming from, risk capital is coming from the bank. It is not a bond. The moment you say that it is a bond, then there are guarantees required, and then so many people, front runner and back runner and all those things, and 6-7% will go along with that. So this is different. Now there is no need for any of the technology. All the technologies are already there.
That's good to know, although I think Kamya was at pains to explain the account aggregator framework, so there may be more room for a little bit more.
You mean account aggregators and all? I am talking about a case where there is no bank, nobody has gone to them. People who are living in tribal areas and all, they form this percentage. Account aggregator is a great idea. I don't have anything. It will come. Let it come also. Let everything come. But then who will work for these people who are very, very poor?
Absolutely.
Now there are 10,000 FPOs which are coming up. And most of the FPOs are women, all directors, everything is women. And mostly it is formed by people who are marginal, small and marginal farmers, less than 2 acres. What type of collective bargaining capability they have? So their ideas have to be aggregated and have a collective bargaining thing. Aggregation. That aggregation should happen at the human level within the group, FPO. Okay.
Point taken, sir. Point taken. We need something obviously more than just technology, although technology is, a critical factor. Just a very quick last question to you, Mr. Tiwari. I was wondering, looking globally, I'm sorry. There is another question, but let me just check if we have the time. Can we take another 5 or 10 minutes? I'm just taking it. Yes, please go ahead. Introduce yourself first.
So, hi, I'm Niranjan Jose. I'm with the technology program at Carnegie India. And my question is directed to Nanjira. So I would like to know what are the areas of collaboration for India and Africa in terms of financial inclusion with respect to geopolitics of technology?
Wow, yeah. I think it's really in understanding who we are trying to serve here, over and above the geopolitical wranglings of whose technologies are superior, because we, I think combined, probably have about 2 billion people who need to be served, and who not only need to be served or included in becoming data points in the banking system, but people who do need to be included or served by this, society needs to work for them. So there's something about that brings a de-escalation, I think, from the typical frame we have been given in geopolitics that should open the kind of conversations we need. Because the people who are still excluded are sitting, I always like to say, they're sitting at the intersections of different inequalities. It will be gender inequality, education inequality. The systems that we have not been working for them. So for us, our conversation in Africa right now about tech decoupling is a non-starter, because it's less about who has provided the infrastructure, whether it's trustworthy. It's about what gets to that goal, because there's the urgency to serve that goal. And I think India has, to a great extent, the same concern, only that there has been a opportunity to build a lot more of your own tech. So there's something about even exporting UPI to some markets that takes that humility approach and then actually helps us address these intractable problems, because everyone who's focusing on tech, at some point, we've heard it today several times, says at some point the end of the scope for them arrives. But this is the real scope. These people do need to be served, and they need to be served not just by gambling, debt, and everything else that fintech or whatever we want to call it is opening up to. Yeah. And we must not lose sight of that.
Yeah. Thank you for that, Nanjira. So question for you, Mr. Tiwari, which is essentially, how do you view India's suite of DPIs? Are they different from what you've seen elsewhere? And digital public infrastructure is one of the priority areas for India's G20 presidency, but I was wondering what your thoughts were, and if you had any to share.
Yeah, so I think the unique nature of India's journey is that it is neither a laissez-faire approach, and the other hand, it is neither state intervention. And that's what is unique in this journey. What it allows what it enables is that it allows a whole host of different platforms to emerge that solve societal needs. I'll give you one example that we've talked about quite a bit today of reaching the last mile. In terms of consumer credit, this is not a rich country, emerging country, developing country problem. Data is showing that 90% of the people who have a bank account cannot borrow. And the reason they cannot borrow is because they don't have tangible capital as collateral. And India's journey is showing, is it possible to employ technology to replace tangible collateral with information collateral? Will that be a journey where poor people, or small businesses that don't have a point of sale machine, are they able to use their data to empower themselves? And so a lot of the discussion and development is moving towards how one can harness data for human development and how you can replace traditional economic models that left out the marginalized groups. And this is a journey where India is definitely at the forefront. And it's a journey where advanced economies can learn from how to use this approach, this architecture for the greater good. And so in terms of the G20 presidency, I think this is one area that India will push in terms of the benefits of digital public infrastructure. Second, in India, privacy principles have been baked into each one of these architectures. DIPA is a perfect example of what has happened. So India will push towards some common data principles that are human-centric. And third, whether this is, as everyone has said, this is a multiple-year conversation. It's not going to happen in 1 year in India's G20 presidency. So what kind of a forum do you create where this can go on?
Thank you so much for that, and thank you to all my panelists and all of you in the audience. That was great. That was a very invigorating discussion, I must say. I think we're on to the next one. Thanks, everyone. Thank you.
Thank you.
Thank you.
Thank you.